In this video I'm going to share what I think is one of the biggest misjudgments nowadays and why you should not buy stocks right now.
If you can detach yourself temperamentally from the crowd, you get very rich and you won't have to be very bright.
Hi folks, my name is Philip and this channel is all about buy and hold stocks forever, as lived by stock miracle Warren Buffett. Imagine you want to buy a 6-pack beer and it's late in the afternoon. The only chance to get one is to buy it at the gas station for 3 times the price you would pay at the grocery store. But you just need to wait for the morning. Then you can buy the same product, your 6-pack, for 1/3 of its price you would have paid in the evening. That's the current situation on the stock market. It is currently so expensive.
Investors behave in very human ways, which is they get very excited during bull markets and they look in the rearview mirror and they say, I made money last year, I'm going to make more money this year, so this time I'll borrow, or the neighbor says, I wasn't in last year when that neighbor was dumber than I made a lot of money, so I'm going to go in this year. So they're always looking in the rearview mirror. And when they look in the rearview mirror and they see a lot of money having been made in the last few years, they plow in and they just push and push and push on prices. And when they look in the rearview mirror and they see no money having been made, they just say this is a lousy place to be. So they don't care what's going on in the underlying business. And it's astounding, but that makes for a huge opportunity.
Let's have a look how Warren Buffett thinks about the current market. This is the Buffett indicator. It shows if the stock market is over, under, or fair valued. The 0% line shows the fair valuation, where you won't pay too much for the investment, but the stock isn't too cheap as well. The current value is about 79% higher than the fair value, and it is 223% over the current GDP value. It's at an all-time high. Okay, it's high, but what is going to happen next? To understand that, let's have a look in the past. The last big overvaluation was around 2000, the internet bubble. It bursted in 2002. In those 2 years, the market dropped from 67% overvaluation to a 20% undervaluation. Then it rose slowly until 2008 to a 20% overvaluation and dropped again to a 48% undervaluation. That means at that time you could have bought the dollar for 50 cents. And since then the stock market rose and rose to the huge overvaluation, even higher than the internet bubble. And that's where we are right now. An additional hint that the stock market is overvalued are the price-earnings ratios of the biggest companies. Let's have a look at Apple with a PE of 40, or Tesla with a PE of 235, or Amazon with 78. So it would take 78 years for Amazon to earn the current stock value, or 235 years for Tesla. That's just absurd. Why would you buy this right now? You should look out to buy stocks around or under the 0% line if you want to be part of the big winners at the stock market. But what to do right now? There are 2 things you need to do right now. At the current extreme overvaluation, you should start to build up a cash position to be prepared for a market correction. And the second thing, what you should do is find the companies you like and which are fundamentally really good and write them on a list. Because during a stock market correction, everyone is confused and afraid to lose money, and you won't think straight. With your battle plan in place and your cash position, you are best prepared for that situation. Thanks for watching. If you enjoyed the video, please subscribe to not miss any new video.